Hi guys, good morning. ECB coming up shortly, US GDP as well. US stocks currently on the lows of their day, just above yesterday's low, below the 100-day moving average as well. It's not looking too pretty at the moment, but we are less than a week out to the election. Bit of liquidation ahead of the election is my explanation for what's going on. I would say I'd be surprised if we don't get down to 32.14 area, the support that we had back in late September after we broke through the 3400 handle and this incredibly important technical level. It's just been one-way traffic, and you can see that we are drifting down. Can we move 60 odd points below, get 3200 today? I think so. You know, you're getting lockdowns in Europe, France and Germany. The UK seems just around the corner as well, and this risk, along with the election coming up, is not a pretty picture for now. And you're seeing some dollar strength, a bit of risk off as well come through. The pound back below 130, finished pretty much on that key level, but the fact that we are below 130, I'm very much a fan of this market moving down. 129.21 yesterday's low, and I think you're going to see 128.58 soon. Also with the well, you can see gold is actually reacting a bit of this dollar strength and coming to the low rather than any safe haven flow. But the euro going into the ECB meeting has just made a new low for the week, breaking yesterday's level, which is obviously quite a key one. And just below here, you can see the importance of this whole level, 117 handle, just a bit below the low that we had on the 15th of this month and the 30th of the one before. It seems like it's gonna happen, and obviously while fundamentals from the ECB could change things momentarily, I still think this market's going to continue lower, at least till the election. Not many days left of that course. The bearish fundamentals for oil, along with a very key technical break, not looking good. And you can see the next target area is within, I should say, touching distance, the double bottom that we had on the 12th and the 15th of June. That just seems, 20 cent or so away. Yes, it is a support point, but the picture at the moment doesn't look too pretty, shall we say. Let's have a quick look over then at the Nasdaq. So we mentioned the S&P not looking good, and it's below its 100-day moving average. The Nasdaq, let's just bring it in. Obviously these charts looking very similar. You can see there's a bit of room to go before it's 100, but it did break its 50, I believe, yesterday. But yeah, that break, you can see this was perhaps a bit cleaner, where we got the break of our all key important level, got the close, came back, hit it to the tick. I mean, what a trade that would have been to have been short. That's just testing this whole support point again now. It is a very key level for equities. You know, if they're going to find support. However, like I mentioned, the S&P does seem like it's got a bit more room to go, but the Nasdaq, the tech, may well hold things up. Personally, I wouldn't really look to get long unless we got back above the low that we had. Let's just put this on a 240 and bring that in. I wouldn't really be happy to get long unless we got back above 11,600, which seems a long way away. The Dow Jones, just to wrap up the equity look, you know, you can see that is testing the support point from the 24th of September, below there, horizontally at least. 25,700 comes in, and that also broke its 100-day moving average. First time it closed below there since late June. So equity's not looking pretty. The dollar is strong, and I expect it to continue.